The US dollar is bleeding, and we've got a critical week this week with non-farm payrolls eyed. How is the dollar going to react? Are we going to see those 2023 lows being tested? Let's break everything down. Hey, baby, happy Sunday. Hope we're all well and truly lit. Yes. We're back with another week in these beautiful markets, and man, things are just incredibly interesting. A lot of fundamental themes, a lot of macro talking points. Things just continue to evolve. And now more than ever, like right at this very moment in time, to have macro knowledge and have your finger on the pulse is crucial. And it's funny. Look, some people won't like me for saying this, but I've seen a number of people as well saying it, just how, and I said this a while ago, how their ICT or well, it is the seen it a few times. The ICT stuff is just not working for them, and it won't just be ICT. There'll be many other strategies, and that's just because how delicate the markets are. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price just spiked here because of this fundamental reason? I don't understand it because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video right now, and how important it is to know your macros and understand the sensitivity of the markets to those key fundamentals right now, all these talking points, all these themes. Your ICT, your strategies just might not be working. Okay. And they may not work, especially you wait till we get to this, till we actually enter the cycle, the economic downturn, the bust phase. Trouble. It's trouble. You need to understand what's going on here. Okay, look, let's just get straight onto this week. If you look at the dollar here, by the way, look, we're heading to the end of September already. How crazy is that? But the way the dollar shaped up, okay, we saw the vulnerabilities there on last month's candlestick there for August. We left this wick, which we've obviously gone on and filled, plus more. And when you look along that dotted line there, can you see that sort of key monthly resistance or support, excuse me, around that psychological 101.50 area? And obviously, finally, that's given way. Can you see along that dotted line how important that is? See that there. For months, we've been supported, found support there, but now we're breaking below. Okay, the body of the candlestick as well, real firm red candlestick below that support. And obviously, we've gone over this, but I'll just continue to do it so it ingrains in your freaking skulls, man. Because the reason I want to keep ingraining this into you guys, so it becomes second nature, so that you are ready yourself. You have that level of thinking yourself, because all this shit that I've seen in the markets and how we're moving now, I've seen it before. We've seen it because I've experienced those fundamental themes. I've educated myself on why the markets are moving the way they are now on a macro level. And so can you, it's just second nature. That's the power you want. So it complements your technical strategy, or it complements your automated systems. Because still, with the systems that I have running right now, I have automated, we have semi-automated, we have manual. It doesn't matter. All of the macro knowledge and understanding what's going on is critical for however you approach the markets. It's critical. All right. You have to be ready. You have to position yourself accordingly. You have to adjust systems, all of that. Anyway, straight to the dollar. Last week, you see we finished in the red. Obviously, 1, 2, 3, 4 consecutive in the red. We've been consecutive to the downside. You know why? Since July, 3 pillars erased or eroded. They've completely eroded. We were supported by decent economic data. Data's largely been softening in the United States. We had the FOMC, who were higher for longer with rates. They're not anymore. These guys are dovish. They cut by 50 basis points. Then in September. And then inflation's cooling. Okay. Just to add to that, look, late last week, if we just bring up the data here for the dollar. Okay, let's take a look. We're covering ground on dollar first. Look at last week on the dollar data front, right at the end of the week, really, is the focus. We were waiting for the Fed's preferred measure of inflation, which is core PCE. It cooled down 0.1% from 0.2, lower than expected, lower than previous. Now, I said this as well, don't let this go over your head top. The components of that, the personal income coming down to 0.2%, so lower than expected, lower than the previous. Personal spending coming down to 0.2%, lower than forecast, lower than previous. At the end of the day, if people's income is lower, right, they're going to be spending less, right? Look, you can see that in personal spending come down. If people's income is lower and spending is lower, what is that, guys? Disinflationary. That's disinflation. So inflation's only, it's going to add to those inflation metrics, and inflation's only going to come down. Stay with me. If personal income and personal spending's lower, what does that mean about the broader economy? Broader economy softening. It is softening. So with that being said, just there on Friday, look at now what's happened to this pricing here of CME for November. Markets are expecting the probability, the large probability now, or not large, but over 50%. Oh, they're going to cut by 50 basis points, man. 46% probability they're going to cut by 25 basis points. So you can see this really, really ramping up expectations that they're going to go again with another 50 basis points. Guys, now I need you to think on at the roots, not just the surface level here. If the FOMC goes and cuts again, back to back 50 basis point cut, do you not think that's worrying? Do you? Very worrying. If they go and cut by 50 basis points again, you know shit is about to hit that fan. Shit is about to hit that fan there. That a major central bank, the largest central bank, of the world, this is the largest economy of the world, are cutting back to back 50 basis points. That eventually that will sink into the market, as I said to you before. Didn't this latest rate cut because markets being delusional? Okay, they're trading at surface, but if they go and cut again, I'm sure some sense will be kicked into their skulls, and then they'll start panicking, and we'll start seeing the liquidation of all these riskier assets, which are freaking at all-time highs. They're overlooking what happened with China as well. China are conducting all these stimulus measures, lowering rates. When is it really going to solve the root cause, the problem where consumers are not wanting to take on more debt? They don't want to spend. So you just by lowering rates a little bit, or okay, by a reasonable amount, are they still going to want to take on more debt? Probably not. They're suffering with a serious amount of deflation in China. I don't think that solves the issue. I said that already last week. Why are they doing this in the first place? Because they see a massive economic downturn. Growth is low. Disinflation is happening. You see it in the Eurozone as well. Anyway, bringing it back to the point, let's just focus on the dollar here. Dollar remains vulnerable anyway because we're surface level trading. We're surface level traders. That's how the market's moving right now. Anyway, key support here. We're seeing around sort of 101, 170. Obviously, we are when you look at this now, we're going to go and challenge 2023 lows. Let's see how we deal with down here. This is massive. Okay, this is big that we're coming down to this 2023 low area. Because here, for me, we either get a big bounce or it's going to open up the doors to some serious fucking selling. Sorry, I had to drop the F-bomb. I know some of you don't like it, but it will open up the doors to some serious fucking selling if that doesn't hold. Now, this week, we're going to come down to this level either way. Okay, heading into, and then obviously, depending on what happens with non-farm payrolls, I think it's very likely there. Just if we just trade technically initially, we're going to be sucked and magnetized to this level. Obviously, you've got a lot of data this week, key data on Eurozone with inflation, which we'll get onto in a moment because we need to discuss that. But just focusing on the dollar level here and a run up to non-farm payrolls, if you have a look, we got manufacturing PMIs for the United States. And obviously, this is labor market data. Jerome Powell didn't speak about economy and monetary policy at his speech last week, so probably be the same here. But on the labor market level, we still expected some cooling here in the JOLTS job openings. Look there. Okay, we saw the last reading coming down much lower than expected and previous revised lower. If we go ADP employment change, we're in a trend to the downside. You see that the trajectory is to the south with the readings. Unemployment claims expected to tick higher this time round, but let's just jump straight to the meat of the week. Average earning expected to tick lower, 0.3%, which is disinflationary. The amount of jobs being added to the economy, you can see downward trajectory, expecting lower numbers here. Unemployment rate expect to remain steady at 4.2%. But if obviously these numbers this week, right? If they're lower, that's dollar selling basically, okay? Because we'll ramp this up even further, and we'll be expecting, that probability will be 70%, 80%, 85%. I reckon that'll jump up to if we get bad non-farm payrolls data, bad labor market data this week. Okay, that will jump up substantially, and obviously that dollar will oh, boy, we will probably finish the week below the 2023 low. Okay, obviously so far this year we are obviously printing lows for 2024, fresh lows at the moment. We're at fresh lows of the year, and we can go on, as I say, and break those 2023 lows if this data disappoints. Disappoints. All right, so definitely a big week for the dollar yet again. Like, man, it's just big week after big week, and yeah, guys, more important than ever. You just really focus on these fundamentals. All right. Anyway, let's dive into everything else that we've got going on this week. Once again, I hope you found value in today's video. As I always say, this is just a small snippet taken from one of our rundowns where we break everything down on a daily basis on a fundamental and macro level and on a technical level, just showing you how you can implement those macros with your technicals, no matter how you approach the market on a technical level, no matter what your strategy is. Having these level of macros and making them go hand in hand with what I show you every single day, breaking down those key macro talking points, the data, the themes, the news, everything, just to give you that macro edge. While others are, this is my big saying now, while others are panicking heading into this economic downturn, this bust, those with macro edge are stand ready to capitalize and constantly seeking out these possibilities and these opportunities in this market. If you do want that level of knowledge, you can check the TFTC premium community, or you can check my fundamental bootcamp course, which is also available. Other than that, stay lit, stay blessed, and let's get it.